Hi friends, I'm back with one more video. This will be the continuation of life cycle of the Ironfly, which I've made maybe like 3 to 4 days back. So this is part 2. So basically, we have discussed about the Ironfly, the life cycle of the Ironfly on the date of deployment, that is day 1. So this video is all about the life cycle of the Ironfly, the continuation, basically what all adjustments we need to do on the day 2. Okay, so let me show you what video I was referring to. I would recommend you to watch this video. Before watching this video, where is that? Ironfly life cycle of iron. Yeah, this video. So this is a 37 minutes video. So I wanted you to watch this video first, life cycle of Ironfly, because this is going to be the continuation, part 1. We have mentioned part 1. So this was the on the day of deployment. So what all variations, what all flavors we can add whenever we wanted to go for the Ironfly. This is not all about the standard Ironflies I've discussed. If you look at this, I've discussed about each and every flavor. I think we have discussed about 7 to 8 flavors of how to deploy the Ironfly. It's not always all about going for the ATM and then buying the edges. Okay, so I'll just leave it to you. So watch this video. This is just a 35 minutes video, and then come back to this video. So this video is going to be like the life cycle of the Ironfly for day 2, basically day 2. So for the example purpose, what I'm doing is do not get confused. Okay, one second. I think by mistake I might have closed the uh, trading view. Okay, let me log in. Not trading view, basically this one, this angel. So I'll go to the sensible. You go for trade. So only for the example, for the demonstration purpose, I'll take the Ironfly for 21st, because it's almost like we have only 2 days for the July 14th. So we will go for 21st. Okay, I'll just take the Ironfly. I'll go for neutral. I'll deploy the Ironfly. Okay, so this is not the Ironfly. Basically, what we go, I'll just delete. What is this broke even? 15,700. Okay, 15,700. What is this? Okay, 15,700 and then 16,400. This is a typical Ironfly. So let's, only for the example purpose, only for the demonstration purpose, let's take this as an example. Do not get into all this maximum profit. So that's the reason I'm telling you to watch my first video, which is this video, the 35 minutes video. So end of the day, if you watch this video, end of the day, we will be having a Ironfly with the market in the middle of the payoff graph. So let's assume that this is your Ironfly for the Friday. So let's say you're deploying this trade on Thursday end of the day or Thursday morning for the next week expiry. So this is how your trade will behave. So now let's see what all adjustments we can do it on next day, that is Friday. All right, so what I'll do, your market stands here. So what I'll do, I'll just see, this is the way I do, friends. I'll mark this. See, I'll just mark one, right? I'll mark on the break even, and then I'll mark on the this is also sort of break even. So I'll say the second break even. That's it. So I'll mark one, I'll mark the break even, and this is simple, friends. The market is standing in the center. All right, so what I've done, I've just marked the Ironfly with 3 parts. This is one, the second part is your break even, this break even, and third part would be your extreme break even. All right, so now we'll discuss about all the possible scenarios on Friday, the next day. So let's say, so this is your Ironfly, you are just holding from Thursday. Let's say market opens flats on Friday. Let's say market opens flats where it closed. So let's say, there are like, it can happen, right? Market can open flat, it can open 0.5% down, it can open 0.5% up, it can open 1% down, it can open 1% up. So let's take all different permutation. Let's say the market has opened flat. All right, and let's say it opened flat, and at 320, till 320 it is flat. Let's say it made a move of only 0.2%, and then it came up, and then it went 0.2%, and it expired here almost at 320. Let's say 320, the market stands in the middle of your Ironfly. So what basically you have to do, you have to just do only one thing, because when market stands here throughout the day for your Friday, that means this two cells will get the decay, right? This two cell positions will definitely, sorry, I've taken okay friends, I've taken bank nifty. I think even this is, see, just for the demonstration purpose we can take. Okay, why to confuse you friends, why to confuse you, let me take bank nifty again. You guys will get confused if I take, okay, I'll go for 22nd, I'll go for, what is that, 35 100, 35 100, 34 100. Okay, let me go for 34 or else 34 200. I'll take that because this is a break even, right? 34 200, and what was the other break even? 36,000. 34 200 and 36,000. Okay, perfect. This is your Ironfly. Again, I'll mark. Okay, your market stands in the middle. So let's say I'll just mark 1 2, your break even, put side break even, your call side break even, and this is your extreme break even. Let's mark it, right? You'll get to know why I'm marking. And see, this is not a magical marking. Try to understand, friend, because if you look at my all the videos, I say that my Ironfly will be basically based on the view of the chart. So these markings are not magical marking. Maybe I might have marked this as, see, let's say, what did I say, whenever you deploy the trade, I'll give you one example. So let's say this is your market stands here. So you have to identify three resistance 1, resistance 2, resistance 3. This is your support. So market stands, so you have to highlight support 1, support 2, support 3. Simple friends, I'll just give you an example of, so this is your support 1, right? 1 2 3. So you have to, this is your support 1, this marking. Your support 2 will be this thing, and your support 3 will be this thing. Simple friends. If you talk about your resistance 1 would be this one, your resistance 2 would be this one, your resistance 3 would be this one. That's it. If you do not know the logic what I'm discussing, so please watch my previous videos. All right, so now I'll delete, for your reference purpose I'll just delete these lines. Okay, this is going to be like very interesting video. Now let's say you have marked all these things, and also let's say you have marked all this on your alerts. So let's say in your trading view, let's say in your trading view, so what is this point? So you have to mark this 35,540 in trading view, just add a alert, and this is your break even, right? 35,740, add an alert, and also you can just add alert at 36,000. Similar way, you have to add an alert in the trading view, alert 1, alert 2, alert 3. I'm just making your job very easy, friends, right? I'm just telling you how to get to this mark, I mean how to select this, what do we say, how to select this thing based on your chart. And also I'm telling you, just put an alert so that your trading will become easy. You should not be monitoring the market. Leave your terminal, enjoy your tea, enjoy your, if you're like not a full-time trader, or else spend this time learning some good stuff, but do not glare at the screen unless this alerts are triggered. That's where we spoil the entire psychology. We sit in front of the machine, even if the I'll tell you all those things. Even if the market makes 2%, then we'll do the reverse buying. If market makes 0.15%, we'll do the reverse buying. Again, if market comes here, again we'll do the reverse buying. No friends, we should not be doing unnecessary adjustments, because adjustments carries a cost with it. You will get the STT charges, you will get the brokerage charges. That's the reason end of the day we get with some good profit, but end of the day we make like 20 30 40 adjustments, and everything will be like we will be spending it for the brokerage. Okay, so now let's say we are talking about the Friday, next day morning, right? We might have three combinations. Simple, right? Market opening flat, or maybe market opening 0.5% plus, or 0.5% minus. All right, we will see. Let's say the market has opened flat. It went like 0.2%, again it came 0.2%, but end of the day at 320, it is at the center of the payoff. So what impact does the put leg up? Obviously this will give you this strikes will have the premium decay, so this will give you the profit. And see, we should not be talking about the profit on Friday, because I give more preference for this, how to mitigate this loss, not on the profit. Now let's say at 320 market stands here, not exactly at center, maybe at here or this point, maybe more or less at this top point of the corner of the cone of the triangle. So what you have to do is, like, your put side premium and your call side premium would become low. So what you have to do is, like, the first adjustment what you have to do is, like, scenario number 1, if the market ends somewhere here, you have to roll down like 100 or 200 points up, and you have to roll up your put and roll down your call, right, by giving very less debit. See, when I say roll up the put, it can be 100 points, it can be 200 points, or it can be 300 points, right? It can be 100, 200. See, based on the VIX, how the VIX and how the premiums are getting decayed, right? I cannot tell you that you have to just get it by 100 points or get it by 200 points. You have to have the thought process in your mind. By just giving, you should not be very aggressive. You should slowly get gradually, because what is your loss now? Right, what is your loss now? Loss is 6,729. If you are able to reduce this loss to, let's say, 4,500 with one adjustments, that's what you should not be doing. Unnecessary adjustments, right? Only one adjustments, even that too at 320. At 320, I'm telling, right? Scenario number 1, right? You have to get your put upside by 100 or 200 points, and also call side by down by 100 or 200 points. What will happen, right? You should be able to have something like this. Your Ironfly should be something like this. You should be able to mitigate this loss from 6,700, get it to 4,500 or 5,000 with only one, right? Reverse buying. If you do not know the meaning of what is reverse buying, you have to watch my Ironfly series. This is only for the advanced traders, right? Done. We are done with, just in case if the market opens flat, and if it stays in the middle on the Friday, right? You have to just get your put wing up, call wing down, right? What do you say when I say you have to exit this, right, and get it to 34,000 or 34,100? If you are able to give, see, there is a simple, if for every 100 points, right, if you are giving like less than 20 rupees, 20 or less than 20 rupees, that should be fine, because you are reducing 2,500. Let's say 100 into 25, 100 into 25 is your bank lot, so this will be like 2,500. You are reducing 2,500 by just giving an extra debit of 20 rupees. So what is 20 into 25? That is like almost like 500 rupees. By just sacrificing 500, you're reducing your 2,500 call on the call side and also on the put side. You got my logic? Because I've discussed about this reverse buying many a times. Okay, this is one of the adjustment. Okay, just in case if the market close here. Second scenario, let's take the second scenario. See, again I'm marking for you 1, right, 2 and 3. Now let's say market was stand the market. Let's say we have a 0.2% gap up or 0.2 to 3% gap down, right? That will not give you any sort of panic. Keep monitoring. The moment the market comes 0.2%, don't go ahead and do the adjustment. This is what majority of the retailers will do, because they got to know for whenever, see, what basically, even I've done that problem. So what I got to know is, okay, whenever the market is here, somewhere here or here, right, I'll just go ahead and do the adjustment. That's it. I don't even look out for the time, at what time I'm doing. Do I still see the decay in the premium? What is the time? So let's say the next day morning 0.5% it has given a gap up, I'll go ahead and do the adjustment. That's not the right process, friends. We have to just monitor the market, right? I'll tell you one thing. Why did you mark this supports, resistance, right, your break even, right? Definitely you are mapping this strike with some resistance. You're marking the strike with some resistance, you're marking the strike with some support, with some, right, whenever the market comes here, there is a strong resistance. So if again the market come here, it might take a resistance and then it might go back. So you have to monitor the price. So do not even do the adjustments the moment the market comes here, right? What do you mean to say? That let's say there is a resistance one, the market is slowly coming, right? It had a gap up. Let's say the market closed here, right? It had a gap up and slowly it is coming. There is a resistance. So this is your resistance. This was your gap up, this point. So there is a strong resistance. So market can take a resistance and it can come down. If it is going like making a green candle, so then you have to do the adjustments. But until then, you have to just monitor. This is right. This is all about trading. You have to map everything with your resistance and support. Same with support. Let's say your market gave a gap down of like 0.5%. But your strike is, your support, critical support is 0.7%. Let's say slowly it comes, it is coming down, but if there is a strong support, so market can rebound here, market can, right, retrace here. So you should not be doing any adjustments until the market comes down. Okay, you got my point, right? So again I'll delete. Market stands here, see this one and this one, we'll forget about this thing. So let's say the market expires at year, or the not expires, stands at 320 at this position or at this position, maybe at this position or at your 0.5% position, right? What you have to do, that's the biggest question, right? The moment the market uh, maybe stands at this position at 320 or 3 o'clock. See, basically you have to do majority of the adjustments only at 3, in between 3 and 320. Okay, so let's say sorry friends, I'm just showing you. Let's say this is your support 1 and this is a support 2. Sorry, I'll take this resistance 1, resistance 2. Market ends somewhere from this position to this position, right? Simple. What you have to do is just get your put wings up inside, that's it. You have to get your put wings inside and make this loss defined, meaning you have to just mitigate this loss. From 6000 you have to get it to some 4500. Yes, whenever you do this, your loss on the call side will increase, but how much it will increase? 6725. Let's say you are giving only 20 rupees of extra debit on the put side, so 20 into 25 lot, this is just 500 rupees. That's it. Your 6729 plus 500 will be your loss on the call side, right? But you should have the view of the market. If you say that the market will keep going up, so then you should not be doing this adjustment. Let's say if you feel like there is a strong resistance, tomorrow market can rebound or retest, so then you have to mitigate your loss. Everything is view based. Whatever I'm telling, this is not a strategy, this is only the blueprint I'm giving you, the template I'm giving you. End of the day, it's your thought process, it's your risk appetite, it's your market view, right? Again some people will say, what will happen if the market keeps going up? So we have adjustments, but what will happen if market keeps going down, right? You will be able to mitigate your loss, right? So in 6729 you bought it to 4000, and slowly you can do the adjustments. Let's say the market the other way, let's say the market stands here on Friday at 320 here or at this position. Simple, you have to do the other way. Okay, let me delete that. That's the reason I've taken this example. Let's say scenario number 2. See, first scenario, market was flat, right? Second scenario, the market stands at your break even. Your what I mean to say, break even in the sense your first break even, the first resistance. Let's say the market stands at your first support. What you have to do, if it starts at the first support, you have to get your put wings inside, because see, try to understand the logic, friend. Try to understand why I'm telling you to get the put call wings inside, because when market stands here, your call side premiums will become cheap, because the delta is higher. Market is, or the testing side is your put side. So obviously when the testing side is your put side, when the market stands here, your delta will be 0.5% here. Got it? But the delta will be like 0.2 0.1% here. So that's the reason your premiums on the call side will be very low and the premiums on the put side will be high. That's the reason we are not doing the reverse buying here. Even we can do the reverse buying, right? But you end up paying more premium. So rather than paying more premium here, we will be rolling down the call, because the premiums of the call will be very cheap, right? You have to roll down the call and mitigate this loss, right? Reduce this loss from 6729, make it to 4500. Yes, your loss will increase on the call side, right? But your market is, your testing side is here. Your market is here, yeah. But what I meant to say is, like, in case if you feel like market can take a support and come back, so you have to do that. But this will be like 6729 plus another additional 500 would be your loss. That's it. See, whenever you are giving like 20 rupees premium while doing the reverse buying, let's say if you're just getting a 10 rupees for 100 points or 200 points, right? So that is like 10 into 25, only 250 rupees will get added to your put side, your loss. So we have to adjust the loss, right, whenever, by doing the timely adjustments. Okay, now I'll just delete everything. So we have discussed about three things. That is that flat, market stands here on Friday, market stands here on Friday. That's it. Now let me show you, right, one more adjustments. This is your first resistance, first support. Your break even would be a second support based on the chart analysis. Let's say the market stands here, it had a flat, let's say it had a 0.5% move, So slowly the market is coming here, slowly the market came here. This is like 11 o'clock, and maybe by the time at 3:20 or at 3 o'clock the market is stands somewhere here, right? Maybe this position, maybe this position. So what you have to do is like you have to do the reverse buying from the put side, because if the market stands here, try to stay with me friends, that's what we hope you're able to understand. This is your first resistance and this is your break even. Let's say your market opens gap up by 0.5%, don't do any adjustments. What did I say? The moment it gives 0.5%, don't do the immediate what do we say, reverse buying. That's what we tend to do. Wait, see the candles. Like, let's say if it's coming up, if it is going up, and if it comes here and if it stays here, let's say if it stays here, then what you have to do, you have a golden opportunity to get your put wings upside, right? And believe me friends, if you do this right, so when the market stands here, this put wings will be very cheap when the market stands at here or at here, right? You're getting right. When the market stands at your call position, your put wings will have become very cheap. So that's the ultimate opportunity for you to get the put wings inside. And believe me, this 4,000, this will not be 4,000, this will be become 3,000, because when the market stands here, right, the premiums will become very cheap and you'll be able to reduce the gap, this gap 35,100, and where is a P by, right, 34,200. So almost we have like 900. So you'll be able to reduce this, you will be able to shift like 300 points or also 400 points based on how the premium decays are happening on that particular day. But the moment you do this, you'll be able to mitigate your entire loss on the put side. Yes, whatever extra debit you are paying in terms of rolling up the put, that will add up here, right? That will add up here. Now the other thing, right, I'll tell you, your market stands here, this is your break, your support 1, and this is your support 2. Let's say market opens a gap down and then maybe market stands somewhere here, right, or maybe somewhere here. Golden opportunity for you to do the roll down of the call. The moment you do this, see, you will be able to mitigate this entire loss, right? This will become 3,000 on the call side. Obviously 6,729 plus it will be like 200 or 300. This will add up into your put side loss. So we have discussed about 5 different things. Flat, that was flat, and then 0.5% up, 0.5% down, and then we have discussed like 0.75% to 1% upside, right, and 0.75% to 1% downside. If you just look at this, you have usually you'll get like 2 to 2.5% of the safety every time, the range, right? But this is because maybe the VIX is low, I believe, so that's the reason you're just getting like 1.2%. So now this should be a 0.75%, and this should be a maybe like 1.4, and this should be like 2%. Right? You have to just manage, you have to just plot, what do we say, select the strikes based on the chart by covering this thing. So just you have to, you can there is a not there is you can even go for 4 adjustment, right? 4 resistance 1, resistance 2, resistance 3, resistance 4, right? This could be one, or else you can just go for resistance 1, 2, 3. It's up to you. So you can go for, or else you can go for resistance 1, you can go for resistance 2, you can go for resistance 3, you can go for resistance 4. See, it always depends on your own thought process. So do not try to copy others. You should have your own thought process. Right? We've discussed about 5 different strategies. Strike selection. Let's say we will discuss. So let's say a market stands here. Next day you have a huge gap up by, let's say, 1.5%. The market stands here. 1.5%, and the market stands here, right? And let's say the market stands at the same position by like 12 o'clock or 1 o'clock or 3 o'clock. So you will have a golden opportunity to make this almost zero, because when the markets was standing here, your premium will be very low. When the market stands here, your premium will be double low. When the market stands here, your premium will be double, I mean, it will be like very cheap. And let's imagine your market is standing at the break even, the premiums of the put will become very low. So now you will be able to make this zero, like by just doing the roll up of put by aggressive, like you will be able to get like 500-600 points. Either you'll be able to make this zero on the put side, or else you'll be able to make this, like maybe like 500 600 rupees profit, this will become green. Yes, this side the loss will extend, right? That's it. Whatever the extra premium you're paying here, that loss will get here. So what you have to do is, like, you have to do two things. First, do the roll up of the put, and now the market stands on your break even. So now there is a greater chance that even if the market keeps going in one side momentum, you will end up into getting this loss area. So what you have to do, right? I've told you many a times what you have to do. Along with doing the reverse buying, immediately at 3 or 320 you have to get your this by 35,730, right, to almost your break even. So what is your break even now? Your break even is 35,740, right? So what you have to do is, like, what, see this buy position, what I'm asking, where is that? See 36,000. See, this is 36,000, right? See 36,000, you have to just roll down to where? To almost your break even, 35,730 or else 35,700, or 30, yeah, 35,700. You have to get your call to that your break even. Yes, you will be giving extra debit, because this is your testing side, this is your panic side. Even though you are giving 30 rupees or 40 rupees for 100 points up move, I mean roll down, you can just go ahead and pay it, because end of the day, this is what will happen if next time market goes up, you will end up into your loss area. So to safeguard this law, this thing, what you have to do is, like, you have to exit this call, you have to exit this call and buy a call of 35,700. That's it. When you do this, your payoff will become something like this, right? Sorry, your payoff will become something like this. I'm not giving any time constraint, friend, because I know this is very important video. You'll be able to mitigate this entire loss, so you'll have only this part of loss. That's it. Maybe from 6,729, I think the loss will be 3,000. Yes, again this profit, right? Whenever you have the profit, right, the extra debit whatever we're giving, so either your profit will go out here and you'll get into like break even, or else maybe like 100 to 200 rupees loss. That's it, right? We have discussed about 7 to 8 what do we say, adjustments. And let's say the same thing, let's say the market stands here, the next day you had a huge gap down and it goes down, and then it is taking a resistance at this thing. So simple, you have to roll down your call. That's it. You have to roll down your call to the, I mean, maybe not even, I would not even say break even, right? Even at times you'll get more than break even. You'll get an opportunity to roll down so that this will become green like this, right? You will have a green Ironfly. This side will be lost. So now this is your testing side, right? What did I say? Along with rolling down the call, you have to roll up the put by giving some extra debit and get the, see, what is your put now? 34,200. Exit this put with the loss, exit this put with the profit. See, basically profit, right? Whenever market is coming down, exit this with profit and then roll up to 34,000. You have to roll up to 34,000 or 34,200. What is, sorry, not 34,200, 34,400 or 34,600, right? So that you make this your loss defined, right? From 6,000 you have to make it to 3,000. So do not go to make this zero, friends. If you get this zero, no doubt, right, you will be able to make your trade green on the put side, but here you'll end up making more loss. So you have to do very gradual adjustment, because we are on day 2, boss. We are on day 2. We have another 4 days to go. We have Monday, we have Tuesday, we have Wednesday, and we have Thursday. So that's what the adjustment should be. Very, very, very gradual adjustments. You should not be doing aggressive adjustments. I'll tell you at the end of the video what type of adjustments we do, right? This is one of the adjustment. Now let's say another thing. Let's say your market directly gaps up at your this resistance 3, right? I mean, I would recommend you to exit the trade, friends. So there's no firefighting. See, until this area you can just do some adjustments, right? If it is already falling in your this area, right, let's say it had a big gap down out at a break even, and you'll keep monitoring it. Let's say the next 2 to 3 candles it came to your second resistance, I would say, right, this is day 2, you are on Friday, your maximum loss of 6,729 will be on the expiry. This is on the expiry, right? You know, right, this loss is on the expiry. Read this entire message, right? But the next day on the Friday, your loss, you will not be into the 6,729. You are only on Friday, right? You are only on Friday, and this is your loss on the expiry. So maybe you might be at 2000 loss or 2500 loss based on the VIX and everything. So I would rather say exit entire trade, exit the entire trade, accept the loss, because we deployed Ironfly with a view of sideways. But what happened with the sideways? It gave a big momentum. That's it. It broke the momentum. See, it broke the this thing, and it gave a big momentum like this, right? Exit the entire trade, accept the stop loss, and I'll just leave it to you whether you want to go for the new Ironfly right away or you wanted to take some time. So I would rather say just deploy a new Ironfly, accept the loss and deploy a new Ironfly. So what will happen? Let's say if the market gaps down by, let's say, like we have a safety of how much, 1.89. So let's say gaps down by 1.5%, and slowly it keeps moving, and then it comes to your this position. So on the put side, don't even think about doing the firefighting. I would say even if you see the market opens gap down by 1-2%, I would say exit the entire trade, because when the market falls, what happens? Your VIX will increase. Increasing VIX, again, every time increasing VIX will increase the premium of your sold position in a drastic way, and you will start seeing huge MTM losses on your calls, on your put side. At least on the call side, at least whenever the market stands here, right? Whenever your market stands here, at least you can just check it. You can at least wait for like 5 or 10 minutes or 15, because when the market goes up, the VIX will fall. At least you will not see huge losses onto your sold position, because this premium will not increase. Yes, this premium will increase, but not in that speed, right? Because VIX is falling. This falling VIX will not enable this premium to go up. But on the downside, let's say if the market is falling down, what will happen? Falling market will increase your VIX drastically. So this in premiums will increase. So on the falling market, exit the entire trade. Don't even look out for firefighting. Serious intent, don't even look out for firefighting. Exit the entire trade and deploy a new Ironfly, because falling VIX, what will happen? Market falls, VIX increase. So high VIX is high premium. High premium is your high range. You'll get high range in your new Ironfly. You'll get good probability profit, right? You'll get good range also. That's it. So we have discussed 6 to 7 scenarios for what is it? Friday. So we deployed the trade on Thursday and we are on Friday. Don't be in hurry in terms of doing that. I'll tell you. I'll tell you what happens. Let's say the market stands here, right? Let's say the market gaps up by 0.3%. Simple. At 9:20, majority of the traders, what they will do, I know, because they're super excited. Even I did that mistakes, honestly. The move at 9:20, the moment I see market going, I'll do the reverse buying at this side, right? And what happens? Market comes down, again it comes in the between. So I feel unnecessary when the reverse buying. Let's say the market makes it 0.2%, 0.2%. That's it. The market is there. I'll do one call roll down, reverse buying. Again the market will come here, right? Again if the market comes here, again I'll do a put shifting, put adjustment, put roll up, right? Let's say again the market comes here, again I'll do one more put roll up, right? What am I doing actually? So I am decreasing the range, I am increasing my brokerage charges, right? I'm making this, yes, I'm making this loss, I'm making this lossless. Slowly I'm able to reduce the loss, but at the same time you're reducing your profit, you're reducing the range of the, what do we say, your range of the Ironfly. Your Ironfly will become something like this, narrow Ironfly. That's it. You'll not have any scope here, you'll not have the range. That's the reason what I meant to say is like do your adjustments very gradually, right? You have to do your adjustments only in the panic, because when you're taking 42,000, right? So what is 2% of what? See, maybe let's say your stop loss is, let's say 1,000 or 2,000 or let's say 3,000, right? Until you see 50% of the, see, either you can go based on the chart analysis, right? You have to mark this with your chart analysis or with the OI build up. See, you can go for chart, you can go for OI build up, right? Open interest, or else you can see what FIS are doing, right? Or else what you can do is like if your loss is stop loss is 1,000 or 2,000 or 3,000, right? Take 50%. 50% of is 500. The moment you see the MTM loss, the moment this one, If you see the MTM loss of 500 or 1000 based on your stop loss, then do the adjustments. Until and unless, don't do aggressive adjustments. I sometimes see that this 4 leg strategy will be like 30 leg strategy. Unnecessary, we will start doing all the unnecessary adjustments because we do not know the view of the market. So what I meant to say is that your adjustment should be whenever you are into panic situation, or just do the adjustment at 320 or between 310 and 320. Unless and until you are in panic situation, go for the adjustments. If or else, do the adjustments at 320, and the next day the adjustments are required at, don't do any adjustments at 920, friends. Don't do any adjustments at 920. At least give some time for the market to settle, right? Do your adjustments at 930, or I would say 9:45, 10 o'clock. If you're in panic situation, absolutely you have to exit the trade at 920 or do the if you feel like, okay, your MTM loss, this MTM loss is controlled, right, which is not exceeding my stop loss, so then you can just wait for 930, let the market 940, 945, then you can just do the adjustments. Even adjustments is a art, friend. Honest, I'm telling, adjustments are art actually. So do not see, whenever you're watching any YouTuber, even if you're watching my YouTuber, say, I've been like very honest in terms of letting you know that adjustments are very, 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 very dynamic. It all depends on your trading style, your risk appetite, where exactly you're standing. We are on Friday. I'm just telling you all these adjustments from the Friday perspective. This is day 2. We are just on the day 2. We have another 4 days, right? We have another 4 days for doing the adjustments. So don't get into aggressive mode. And have we discussed anything about selling some extra put or call? See, my humble request, friends, I know this works or not, but based on my experience, no extra sell either from your call side or from your put side. Let's say your market stands here, all right. So what will you do? You'll do the reverse buying, and you will do the roll down by giving some extra debit. Don't even think to sell anything from the extra uh, put options, because we are on Friday, right? So we have 3 days decay. So weekend, first of all, it is weekend. We never know what happens on weekend, right? A majority of the things will say that if we go for selling the premium, right, we will get 3 days of decay, 1, 2, 3, or let's say 2.5 days of decay. But honestly, friend, I've tried that many a times, but we will not get that decay. So better not to go for extra selling on Friday. Have your peace of mind weekend. I mean, enjoy your weekend. Anyways, this is a loss defined strategy. What are you doing? You're just doing a roll up and you're doing a roll down based on the 7 to 8 market conditions what we have discussed. If you're not able to understand this video, pause the video and watch 3 to 4 times, friends. Then you will get it. If you are very new to Ironfly, watch my Ironfly series. You have like 30 to 40 videos. You don't need any other paid strategies on the Ironfly. And believe me, I'm just coming up with like 3 to 4 adjustments. So end of the day, you have all your adjustments ready with you. Okay, so we are discussing, this video is all about, see, I'll tell you, watch this video. Watch this video, friends. Where is that? First watch this video, life cycle of Ironfly part 1, and then only watch this video. This is for Thursday on the deployment day. So this video is for the, what do we say, for the second day. This is day 2. Okay, this is day 2. Only for the reference, for the demonstration purpose, I've taken this strategy. Do not get confused by looking at 21st, because I'm taking this as a reference for the demonstration purpose. We have discussed 7 to 8, and there are like many, there could be many, right? See, if I start talking about all the adjustments, I mean scenarios, right, I mean it will be very difficult. But what we did, I said about flat, I've told about like 0.5%, right, up and down. See how we started. This is 1, this is 2, and this is 3. And what did I say? I said fourth one was slowly if it stands here. Fifth one was what if it comes to your break even. Same thing, right? Your break even. Seventh one, what we discussed, right? Just in case if the market goes to your second break even. And then seventh, eighth one was, let's say your market gaps up by 0.1.5% and slowly it goes to a break even. This is, so we have discussed like 7 to 8 to 9 scenarios, right? And also I've told, do not try to sell anything on the Friday, because we have the weekend impact. Weekend, you know, right, 3 days, anything can happen, because our SGX Nifty, our Nifty futures gets traded in SGX Nifty, right? we ended 330, but our Nifty gets traded in the Singapore market until our 12:30 or 1 night PM. Anything is feasible, anything is possible in the SGX Singapore market. So what did we discuss? Right, I'll do one thing just in case if I forget anything. Let's say there are, again you might be telling why the hell we are not doing any broken wing fly when the market stands here. Why should we do? Right, again I'll just leave it to you. If you want to deploy a broken wing fly, you can deploy, but the moment you deploy a broken wing fly here, right, if you deploy the broken wing fly, so this side will become what? This side will become unlimited loss. This side will become unlimited loss now. Right? Why should we uh, make our trade unlimited either on call put side or on call side, and especially on the Friday? Don't you want to enjoy your weekend? Right? There is another 4 days left for us. Monday till Thursday. Weekend. Why should we take the what do we say, the 2 days of weekend concern? See, anything can happen, right? I mean, just just to have that. See, basically that's what I do on Friday. I do not go for any extra selling. Anything can happen the next, because I would say not 2 days, I would say Friday, because in SGX Singapore Bazaar Nifty gets traded till morning, and then oppose that you have 2 days of DK, sorry, 2 days of weekend. So anything can happen. So that's the reason. So if you want me to recap everything, right, we are doing this only for Friday, that is day 2. We have covered 7 to 8 scenarios, and adjustments are not are very dynamic. Do not do unnecessary adjustments. Let's say your market comes here, don't do one roll up, and again if the market comes here, you'll do one more roll up, again one roll. Again if the market comes to center, what will you do? Right, you'll try to do roll down. Again if the market comes to here, you'll try to do roll down, rather than doing 2 to 3 roll downs on Friday. We are talking about only on Friday, friends. 2 to 3 roll downs. Wait for like 11 o'clock, 1 o'clock, 2 o'clock, and then at the end 3:30 or 3:20, you can just do the roll down and roll up. You are done based on the market, right? It can be just, see, what all combination we have done. If the market stands here, you have to do roll up slowly and roll down, right? Let's say the market stands here, you can do roll down, sorry, roll up, and that's it, roll up, and maybe you can just do roll down also. Maybe this is for 200 points, and this you can get it done for 200 points. Same thing, the market ends here, right? Roll up by roll down by 200 points, and maybe roll up the call by 100 points. If the market stands here on Friday, what you have to do, you have to roll up aggressively. When I say aggressively, 2 to 300 points, and if required, if you feel that market can bounce back, leave it. Or else if you think that market can go that, this you have to do one roll down, small roll down. That's it, 100 points. So we have discussed everything, right? I've just given you this. So this is the life cycle of the Ironfly, right? The actual adjustments and everything starts from Monday. So if you want me to make a video on Monday, see, if you want me to make a video on Monday, let me take you to that video, friend. I think where is that Ironfly? Okay, let me see. This is what we've discussed, right? This is what we have discussed. All right, this is what we have discussed. We started with Thursday with our first video. This is your second video. Let me delete. This was your first video, and this is your second video. So I've told you what all adjustments we can do. So I'll make a video on 3 on Tuesday, Monday, Tuesday, Wednesday, and Thursday. Right? Another like 4 videos. 1, 2, 3, 4, and these two are very important. What is that, friend? You know, right? 3:20 on Wednesday and 9:15, 9:20 on Thursday. Right? This is all about increasing, adding the extra credit to our strategies, right? How to add the extra credit. So this all depends on the views I get, and also, right, I should get the comment saying that yes, I need the see the way we have seen it here, right? See, we have 43 comments for the market structure way. Sorry, so we have 43 comments, friends. I mean, I loved it actually. See, where is it? So we see views are very less, but okay, this is, I mean, because my channel is very new, because I'm not expecting thousands of views, because I have like almost how many subscribers? 1 second, friend. So end of the day, 1 second. Yeah, I have only 922. right? But see the comments, right? This is what I want. I want all the comments, like see, these are all the good comments I'm getting actually. So they're asking me to make a video, so that's the reason I made the part 2. So if I get more response, more views, more comments, more likes, right, more subscribers, definitely I'll make a very good video on the Monday. I think this Monday is a very crucial. So there comes your broken wing fly. What is that? Your ratio spread, your reverse combination of reverse buying with extra selling. This is the day, friends. So that's what you know, right? So do not deploy day one, you know, right? 1 second. Day one, we will be just deploying. We have seen the n number of flavors. Day two, we were just focusing only on reverse buying if the market was what? If the market was sideways, right? Let's say just in case if the market was like huge spike, we discussed that we have to exit the entire trade and deploy. So now what will happen on the Monday? Because between this Monday and Friday, we have almost 3 days, I would say. Friday, half a day, because SGX Nifty gets traded in the, or Nifty gets traded in the SGX, and then 2 weekends. Anything can happen. So your real adjustment starts from Monday. So if you want me to make a video on Monday, I'll try to cover all the, what do we say, the adjustments, like your broken, what, when should we go for broken wing fly, how does your payoff looks like, what are the combinations of broken wing fly with naked selling, broken wing fly with ratio spreads. All those adjustments we'll discuss for Monday. I'll make one more for Tuesday, Wednesday, Thursday. This will be like a very good experience for you all, you guys. I mean, and friends, and one more thing is, like, I'll just keep it very open, so just in case if someone wants to add some point saying that, boss, you have missed one market condition, right? If you can just comment that, or else if you can just put your own thought process, right, that would be learning for me, learning for you, and also learning for all the other traders. That's what I wanted my channel to be, like, very interactive. I'm open for all the negative, I'm open for all the negative comments. Where exactly a market starts, all right? I'll not ban anyone. I'll not ban until unless he's going personal, right? Until unless he's like not backing up with the what do we say, the data points. Yes, anyone are open to do the negative comments in case if I'm wrong. Yes, I'm quoting that I might be wrong, 100% I might be wrong, because end of the day, even I'm exploring the market. I'm not an expert. I mean, there is no expert as such in the market. Even the so-called successful trader will not quote them as expert, right? It's end of the day, the market will teach us daily, right? If you feel like adding some comments, right? See, I'm so happy to see this all the comments, right? See, there are like pretty well comments, right? So I wanted you guys to just comment it in case if you feel like somewhere I've done the wrong, but back up with data, right? Thank you, friends. I think I'm not sure, like, did it went for 40 minutes, 50 minutes, but I'm not putting any time constraint as such, because I wanted to give all the content, right? So we have discussed about the, it should be backed up by your chart. I mean, just I'll tell, I'll one more, like, one last 1 minute, wait, last 1 minute. See, whenever you are marking this thing, these are not the magical this thing. You have to back up, you have to support this with your chart plus your OI and plus your, that's it, chart and OI is sufficient. You have to just put, and what you have to do, you have to just add this alerts in your trading view. Until and unless this alert is triggered, you should not be doing any adjustments, unnecessary adjustments. That's the best way you have to do. And then on Friday, try not to sell any extra sell, right? Do not take the risk of the weekend. All right, thank you, friends. Thank you for watching my video. Hope you love this video. I mean, in case if you like this video, please, it takes 1 second for you to give it a like, and also to subscribe, and also please share with your friends. So do not see, especially for people who do not like it, at least just give it a like for the attempt, right? At least give it a comment. See, I mean, even I've done the same mistake. I used to watch all the videos, but I never used to like, but because I know that I believe in karma, whatever we do, that it happens. But at least, friends, I'm just what do we say, just throwing that light on towards you, saying that please like it, subscribe it, and also share with your friends. All right, thank you, friends. Thank you for watching my video.